Hello and welcome to Finextra. I'm Emily Horler and I'm here with Michael Kayser of Beeptify. Thank you very much for joining me. So how are payments being disrupted?
I think if we look at payments, what I normally say is the last 30 years, payments haven't actually changed that much. In Denmark, we started to do card payments 30 years ago, and you went down with your card payment, and they had this old machine where you just copy off your card number, and then they'll deduct like 300 crowns from your bank account. Then after some years, they start to have the magnet stripe working, and you could now swipe your card, and then you can make a payment of 300 crowns, and on your bank account you still see that you're missing 300 crowns. Nothing actually really changed. Then afterwards you had the digital chip on the card provided by the bank still, and again nothing really happened. Now we're talking about NFC cards that you can beep when you're making a payment, and it's still the same process. When you look at your card statement, you still see that you use the same 300 crowns. So something definitely needs to change here, and needs to what many of these new fintech companies are coming up with is how can we add more to the service of a payment? And one thing that we have been doing, if you compare our payments to a normal card payment, we're not married to any kind of technology. So we can do Bluetooth payments, we can do fingerprint payments, we can do NFC payments, and we can do app payments with a QR code. But when you use our payments, you would either, that could be your fingerprint or it could be the NFC ID. When you buy something and look on your statement afterwards, you'll be seeing that you have been buying a double burger and a Coke and some fries. So you actually have the details of what you actually purchased when you're looking on your account statement. By receiving this information in the purchase, in the time we're actually doing the purchase, you'll also be able to do much better loyalty programs or cashbacks or other kind of schemes that could motivate the users to actually use your shop instead of something else. That could be give them every 10th cup of coffee they're buying for free and stuff like that. So that's something that we are working with in Beeptify, making the payments much more advanced, much more innovative than they have actually been before, because nothing really happened the last 30 years. They just changed the media of how you actually made your payments. They didn't change the payment itself. So I definitely think this is a place where we today start seeing new startup companies trying to coming up with new payment solutions that will make give a lot of more value to the actual payment itself.
How should banks be working with startups to get ahead of the curve of disruption?
In most cases, of course, banks are different. Some banks, have maybe newer technology, newer platforms than others, but I think that many banks, they need to start working very closely to these startups. They need to maybe realize that banking doesn't need always to be linked to payments. I mean, you can be a bank and they're still good at when you need to borrow money for buying a house, you need to buy a vehicle, or you need to do something else. Then the bank can give you the credit, they can borrow the money, and they can actually also hold your money, which you have received on a salary, where the payment part of it doesn't necessarily need to be linked that much to the bank. Where the way that we are working is that when you're making a payment with our solution, it can be money that is either automatically taken from a credit or debit card, it can be money that you have loaded on your account, or it could be cash that you have topped up on your account. But for the future, we're also expecting that we'll be able to take this money directly from the banks, that they will open up for their platforms for us to just, directly take the money from the person's bank account instead of going through Visa, MasterCard or the DEN card or anyone else who could be in this process. So one thing that they could do, I think that they should definitely start working a lot more with these new companies, these new startups that have a lot of great ideas for making payments, making it much more easier for the user and giving it actually the user more value of making payments, and then just being the more core bank, holding people's money and giving them a loan when they need it.
So as a fintech startup, how do you get or maintain the agility to respond to evolving opportunities?
I think being a fintech and a startup, we've been around for a few years now, but Instead of, when we started making these payments, we were looking at different solutions that was already on the market, who had some payment platforms and that we could use as a white label solution. And then we could change them a little bit into what we actually wanted to do. But we very quickly found out that it would be difficult. It was too strict, there was too many changes needed for us actually to start making the payments of the future. So we decided to make our own payment platform from scratch, which today is definitely a very big advantage for us because we built it on some new technologies and we built it so it was very agile, flexible for actually making changes. So where we are today, where we are making payments, easy payments with a lot of added functionality, we actually started out launching an online banking solution that was supposed to be for the unbanked or the unserved in the UK. But it was still, when people had to make payments, it was still two accounts making transfers from one account to another. It could be a payment, it could be from one person to another and stuff like that. But in the end, it was still just transactions between accounts. And by having that, by having a new system that can actually make these transactions, then it was easy afterwards for us. Someone wanted to make a payment with an NFC ID. Yeah, but an NFC ID is just one way of identifying a person. In the end, it's still just a transaction from one account to another. The same goes for mobile phones and many of these other devices. And we didn't, when we make our platform, restrict ourselves to only being able to hold money. So the same way you can have 10 pounds on your account, you can have 10 beers. And these 10 beers can be transferred from your account to someone else because we don't care if it's actually a currency or it's some other product that we have on the platform. And a few times during last year, we have kind of tweaked our solution a little bit to make sure that it's actually what our customers want and need out there. And definitely being agile is the way to do it.
Michael, thank you very much. And thank you for watching.